Today we're talking about AmeTek. It's a $17 billion market cap, industrial automation, high-tech kind of company. Makes a lot of electronic components, very technical, really great company, very consistent company. We really like this stock. It's a kind of stock that most people can own for a long period of time. And won't get a lot of press. It's a little bit under the radar screen because of size and just, it's kind of industrial. It's a high-tech, high-industrial kind of a combination because there's a lot of extremely intricate electronic components. But this is not, an Apple iPhone. So let's see. Let's just dive into their main businesses. You'll see on the slides behind me here. This is one of their main slides of just what they do. And process is one of the things. You can see the little picture there is pretty, looks like very technical, semiconductor wafer there, and it is quite technical. So some of the things in that area are test and measurement in a lab, chemicals, oil and gas, semiconductors, and factory automation. So like I said, very technical. And that's $2 billion in sales, and so $4 billion total sales of this company. So half their business is process. The next biggest is actually on the other end of the slide, the automation and engineered solutions. So it does seem that there's overlap in a lot of these, what they call business units, but I don't know exactly how they categorize them, but there does seem to be some overlap. Anyhow. Automation and engineering, so it's more kind of factory automation. There's some aerospace, medical, semiconductors as well, industrial, and that's a $1.3 billion segment, business segment. Power and industrial, they showed some good examples of the trucks and their the gauge, the dashboard. A lot of the gauges on there would be made by them, and then aerospace. A lot of the electronic equipment in aerospace, yeah, a really interesting company, really fascinating products that we use in a lot of high-tech area, but I mean it's considered industrial, but because it's so technical I would consider it almost high-tech. Okay, let's look at it in our world, in our model, and I think you'll be really impressed with the return on capital profile. So here you see back in the late 90s and early 2000s, around 10-12% return, kept improving to about 17% in 2008, and then went down to 15%, and the stock came down roughly around the same time. So this is great to me. This means that the model works really well for this company. You follow return on capital, and the stock's going to do similar. It's going to follow the same pattern. It's very similar. Then after 2009, after a little dip, return improved all the way up to 28 and kind of maintained that for about 4 years. The stock just powered right through that. That's great. Then a little dip, not massive, but in 2016 went down to 25%. Stock took a little bit of a bump down. That totally makes sense. And now stock's taken off again as the returns have gotten stronger again, back to 27%. Valuation wise, actually pretty simple. Didn't have to do a lot of manipulation of the forecast, just kind of a standard fade. Maybe we put a little bit of a beat the fade in this scenario we're showing, but it seems very justifiable considering how long this company has operated at a high level. So a beat the fade makes sense to me. And they're in a very good space. Okay, so our fair value is $96.50. It's trading at $75.30. So that's roughly 28%. Let's just call it 30% upside. Quick summary: high quality, very good track record, a long term, improving return on capital now that's very high, and in a very good space of industrial / high technology. That's our hypothesis for the stock.